Good morning, everybody. As people come into the room, we will just give everybody a moment or so to make themselves comfortable. Find your way in. If you can see and hear us, pop something in the chat box for us so we know that we're coming through loud and clear for you. Thank you for taking the time out of your hectic schedules. We're in December now, so we're edging closer towards January. So appreciate that every hour is a commitment, and so we do appreciate it. So while everyone comes in, I'm just going to share my screen so we are ready to go. And thank you for those that have already popped stuff in the chat box for us. So another 20 seconds or so, and we will get underway for part two of our Dext webinar series. Okay, let's get underway. So welcome everybody. Thank you for joining us today. This is part two of a two-part webinar series we put together with Dext, helping you think about optimizing accounting automation for efficiency. We will certainly be done for you by 11:30 to let you get back to your day and all the things that you need to be doing. I'm delighted to be joined by Paul and Katie again this week for the second session. So just in terms of introductions, for those that don't know me, I'm Will Farnell. I'm founder of Farnell Clark and co-founder of App Advisory Plus. A very long-term Dext partners as well. I can never remember what it was, 2011 or 2012, but we've seen the growth of Dext. So delighted to have Paul and Katie with me again today. Just in case we've got anybody here this week that wasn't here last week, Katie, do you want to give everybody a quick introduction to who you are?
Yeah, sure. So I'm Katie. I worked in a practice in the East Midlands for 13 years and started there as an apprentice, worked my way right up to spending the last 5 years there managing our digital transformation projects alongside a portfolio of clients as well, which we talked about last week, not being the ideal setup, but there we are. That's how it happened for me. And then I left practice in 2017 to work for Xero, initially in a success role, and then for more of a practice solutions role for the last couple of years that I was there. And then I've been at Dext for, it'll be our 3-year anniversary in January, won't it, Paul? We come as a bit of a pair.
It will be. Yeah, 3 years gone very, very quickly. Morning, everyone. Delighted to be here this morning. For those who've not met me before, I'm Paul Lodder, our VP of Accounting and Product Strategy here at Dext. Like Katie, I was also worked in practice. I was in practice for just over 20 years, and then towards the end, I was also responsible for our digital transformation. I was a partner in a firm where like Katie had a portfolio of clients as well, but I spent a lot of time rolling out digital solutions across our client base and supporting the team as well.
Excellent. Thank you, Paul. So what we're going to talk about today, we've done some welcomes. We'll just do a very quick recap of what we talked about in part one for those that weren't with us for that session. We're then going to talk about kind of the next stage, really. In part one, we talked about why you should be doing this. Today, we're going to dig a bit more deeper into how you can fine tune your processes, your automation, and what you deliver for clients. We're going to talk about real-time data or live data. Why is it important? How do we deliver it? Paul and Katie are certainly going to share some of the ways that Dext provides a platform to enable us to both measure what we're doing, validate the data that we hold, and look at ways to improve what we're doing. We'll touch on how you structure your team and workflows for maximum efficiency and client service. We'll talk a little bit about integration and customization, so how you can integrate other tools into the tech stack to drive even greater efficiency. And then to wrap up, we'll talk about some of the things that might be coming that are around the corner. AI is kind of at the forefront of everybody's minds. What does that mean? What's coming next? What does robotic process automation mean for what we're going to be doing in the next kind of 3 to 5 years? Q&A, feel free to put questions in as we go through. These are interactive sessions. We'd love to get your questions on anything that we talk about. So we'll keep an eye on the Q&A box and jump in and answer those as we can as we go through. So I'll stop screen share for the moment. And in terms of part one, Paul, Katie, we went through the whole kind of why should people be doing this, and we kind of touched on a number of different areas in terms of, well, it's the right thing to do for clients, is the obvious one, but actually it's the right thing for firms in terms of increasing value of the firms. We're seeing lots of M&A activity in the market at the moment. Clearly a firm that is automated and has made this transition to cloud technology is going to be more appealing to potential buyers than those firms that are not. Anything that you just want to kind of touch on that you felt were the key points from part one in terms of this is why you should do it, and the start point of how?
I'm sorry, you go, Katie. Oh, I was just going to say, I think the big thing for me in part one was very much also, it's all around the team as well. It's empowering the team. It's creating that capacity. We know there's a retention or recruitment challenges at the moment, and giving the team the opportunity to focus on new and other areas is always going to be of benefit, and moving away from the sort of traditional manual task to actually maybe having more frequent conversations with clients and really becoming that business advisor. And that's only possible with the capacity that technology creates.
Yeah, absolutely.
That's exactly what I was going to kind of say, is that you can look at it from a lens of all different like humans within the chain. So we're talking about, first of all, from a client experience point of view, it's especially as the demographic of the clients that we have gets younger and they begin to have grown up in a world of technology in your pocket. I'm sure the school education that our children are getting now looks very, very different to the one that we all had. I was talking to them the other day about the fact that we didn't even have a computer in my primary school until I was in year 6. Dare I say, maybe there wasn't one in yours at all? I don't know.
I remember
it was secondary school when I got
one. Whereas they've grown up with the phone in their pocket from before they were even at primary school, half of them, or at least they knew how to use a phone. So I think from that point of view, as much as they're not all business owners just yet, as the next kind of 5 or 10 years go by, they will want to be interacted with in a way that feels comfortable for them, and it's not completely alien to go to work and work in one way and deal with their accountant in a completely different way to the way that they would function in their personal lives. So there's definitely kind of benefits there from a client's point of view, and making sure that you're kind of meeting them in their needs and in their comfort zone. But then, as Paul said, just the same for staff, just the same as you mentioned, Will, for the partners within the practice, that it does make a more valuable practice. I'll never forget the stat that Xero rolled out a couple of years ago in their business report that said a firm is worth at least 2.5 times more when it's digitized than it is when it hasn't adopted cloud technology. So it's important at every level within a firm, every human involved in the process, that automation and cloud solutions come in at some point.
Yeah, and you've bridged really nicely there, Katie, because the first thing to talk about is this idea of, look, we've got this technology. It was designed to give us up-to-date data, and by not using the data that we're getting on a daily basis means that we're perhaps not meeting the expectations, as you set there, in terms of the next generation and in terms of what their expectations might be, particularly when they see a bank feed or whatever coming into an account. And I probably mentioned it last week, but for those that weren't there, again, using Xero as an example here, Xero have just published another benchmark report, and in that they said 37% of Xero, sorry, I need to be careful because I was corrected. It's not based on the data that Xero have in terms of their users, but based on the survey that they did, only 37% of people are using bank feeds, which just like blew my mind, because it means 63% are not using bank feeds and are therefore uploading CSVs, or worse still, keying data manually.
And then, you know what, there's something in the middle as well. Like, even when you are using cloud technology, it is about really updating your processes as well, isn't it? And I know we spoke about this last week, but I'm just remembering a client that I dealt with who was more forward thinking and you know, had adopted the technology alongside me right at the start of us using Xero. And I gave them their accounts that first year and asked them to approve them. They jumped straight into Xero to work out what was in the different figures. Of course, they didn't agree to each other at all, because the first thing I'd done with my old processes was take the trial balance out, pop it into Iris we were using, make adjustments all over the place. So none of the numbers in the accounts agreed to anything that was happening in Xero. And there was a real disconnect for them with their experience of, well, I've got this real-time information over here, but you've taken it out and you're not updating it. How can I approve accounts if I don't know what's in there? So it's just kind of making sure there's that real connection across all of your workflows as well, isn't it?
Absolutely, and we're certainly going to talk about kind of structuring team and workflows here, but that's a really key point, because what I've been kind of banging on about for the last few years is that the use of this technology requires us to fundamentally change the business model. So actually, we've got to almost scrap what we used to do, because we're using technology that's designed to work in a completely different way. And the bank feeds is a prime example of this. And I did a webinar not too long ago with Hamish Edwards, one of the co-founders at Xero. And I put the question to him because there was an interview that Rod Drury did when he was talking about bank feeds, and said the whole reason for bank feeds is so that business owners and accountants can do a little bit every day. And that's why they did it. It's like, we can get the data from the bank every day so that the data is right in the system, and we're all accountants here. So what I think is often underestimated from what Xero did is they changed the whole dynamic of how to do accounting, because we were trained to start with purchase ledger and sales ledger, whereas Xero said, actually start with the bank. So start with the bank data, and that really was kind of turning it on its head, wasn't it?
It's arguably the biggest change that the industry's had to look at, really. Like, we talk a lot about the self-assessment going from paper to electronic. We talk about, obviously, calculators, or just the introduction of, you know, not doing everything on an ETB piece of paper anymore and actually using a computer or a spreadsheet. But actually, arguably, this could be the biggest change that we've all had to kind of get.
Absolutely. So if we're getting bank data every day and using Xero as the people that really kind of created this disruption of how we should do this, we're getting the data every day, but we know that the vast majority of firms are still doing bookkeeping on a monthly or quarterly basis, which kind of misses the point. And certainly Paul and I have done many a webinar talking about the power of daily bookkeeping, and I was doing webinars with Receipt Bank, as was before you both joined Dext, talking about the power of doing daily bookkeeping. Yet still we know, and I'm sure you guys see it firsthand with the firms that you're working with, the percentage of people that are doing that and are processing transactions on a daily basis has still got to be way below 5% of accounting firms. So the start point really for the conversation, I think, today is we've got bank feeds, we've got Dext to let us get data from clients at the point that they spend the money or at the point that they get the invoices. So why should we be changing our business model and making conscious decisions to say, actually, you know what, doing bookkeeping once a month or once a quarter as a means to doing a VAT return or a set of management accounts is no longer the right way? Why should firms be saying, actually, you know what, I'm getting this data every day, I've got to do something with it? Open question. Paul.
I mean, I think there's a number of sort of areas for consideration here, but at the end of the day, client queries don't just come through once a month, once a quarter. You often get queries every day from clients, and sometimes that actually forces you to then update the bookkeeping or to try and allocate some time to get the numbers up to date so that you can answer their question, whether it's remuneration planning, whether it's some insights around tax. And we also know that if we leave things until a compliance event or management information, that if there are queries, all of these queries start to build up. And as time goes on, clients may forget why a particular transaction happened or what it related to. And ultimately, what it actually leads to is often more time being spent, because there is this sort of pick up, put down, waiting for responses and everything associated with that. So by having everything up to date, number one, it ensures that if queries do come through, great, you can be on the ball, you can answer them fairly quickly. Secondly, if you are responsible for all of the bookkeeping and the processing, you can also be more proactive as well. You can pick up things so much earlier. You can advise clients so much sooner as well, and give them a steer of whether, just to let you know, your VAT liability is probably going to be around this sort of number. Looking at your cash balance, there could be a bit of a challenge going forward. So this is where, I think, and the direction of travel with technology that we'll come on to later, but when we're looking at predictive analytics and everything else, the more up-to-date numbers there are, the better the predictive analytics, the more conversations you can have with your clients, the better it is for some of the more less experienced team members coming through who can have more engagement, more interaction. And overriding all of that for me is the more interactions, the stronger the relationships, the more opportunities that often come out from that as well. Special work is often incredibly important for all firms, not just your recurring work as well. And it is absolutely clear that the more interactions you have, the more conversations you have, the chances are it's going to lead to additional services being provided as well. So, I'm very much of the view of, the more regular transactions are updated and processed, the better the outcome for everyone involved.
And there's a partner angle there as well, isn't there? As in, there's a benefit for the accountant in that, just as an example, if you use Precision, then we've got reports which can group pricing bands. So if you price on a transactional basis, as an example, you could also do it on a turnover basis, whatever it is. Then you can run a monthly report to make sure that the transaction numbers that were agreed during the quoting process are still the same for the client that's within that gold band or that silver band of pricing or whatever it is. If they then go over, and you might not decide to raise the fee quote straight away, but if they go over a number of months, then that's a nice proactive conversation that you can have with the client to say, we can see the business is really picking up, the transactions are higher, the turnover's larger, and that's going to be a more burdensome bookkeeping requirement from our side, and so we're just going to align the pricing process, the pricing structure with the transaction numbers or the turnover levels for your business, rather than getting the information in at the year end or looking at it at the year end, realizing it's double the amount that you were expecting, then feeling too awkward to have a conversation about it, because probably you should have noticed that at some point during the year, and so probably just suffering the hit of the additional bookkeeping work, and possibly having a conversation about it next year. But let's be honest, we're accountants and we don't like having that conversation at all, so probably just not doing a lot about it. But if you can be really clinical and just say, we can see the transaction numbers are going up, therefore our work is going up, therefore we'd just like to align the pricing banding for your business, and it just makes it so much easier.
I think that's a really important point, and it also links to something we used to do. I used to do with my sort of fellow partners as well, that every month we would have a dedicated time where we'd go down our debtors and we'd look at the aging of debtors. And actually, that alongside some up-to-date numbers in terms of the performance of the client also really helped us as well. Thankfully, it was never a real issue, but if we started to see debtor days increasing or a particular client not paying, often the first question from the managing partner was, well, how are they doing? How is everything? Is this a concern for us as a potential bad debt? Do we need to have a chat with them? And the first thing you do is often, let's just see how they're performing. Do they have a cash flow challenge? Or Is it they're just actually using us as a bank and just delaying paying us because, we're always kind, we're always friendly, and we never put too much pressure on sort of collecting debts and things like that. But it was those additional insights that could actually help in other areas as well. So benefit for the firm as well as the client.
Yeah, and I think at the most simplistic level, when we're talking about the reasons why we should be doing this regular bookkeeping and using the data to deliver. I mean, whether we call it real time, for me, I always talk about live accounting data, because we can't quite do real time yet, but we can get pretty close to it. So we talk about live data. And the analogy I always use is, firstly, if you're listening to this and you're a practice owner, how often do you reconcile your own bank account as a practice owner? I would like to think that you're doing it every day or every other day, because you want to know who's paid you, who hasn't. So that's point one. If it's good enough for you, it's got to be good enough for your clients. But more interestingly is, if you're employed by an organization as a bookkeeper or as a financial controller, and the bank wasn't reconciled every day, how long would you keep your job? It's like you wouldn't. You'd get fired if you said, I'm just going to reconcile the bank once a month or once a quarter. Is that okay? Of course it's not okay. So when we're charging a client for a service, and that's a topic for another day, because many people will do bookkeeping as part of the accounts production and don't charge the client for the bookkeeping. Definitely a topic for another day. But if you are charging the client for bookkeeping, then why is it okay to do it once a month or once a quarter, when we've just said that if you were employed directly by the organization, you'd get fired? So there's lots of really strong reasons, and until we as accountants and bookkeepers recognize the value of what we're doing with bookkeeping and see it as an end in itself and not a means to an end of doing a VAT return or a set of management accounts, we're always going to consider it as something that just has to be done. We've got to reposition it in terms of, this is about giving clients the data and the information they need to make the right decisions for their business in that moment. So loads of reasons why. How do we do it? How do we go from doing bookkeeping and getting a pile of paper once a quarter to do a VAT return and doing the bookkeeping to the point at which we can do it every day, systematically? We almost don't have to think about workflow with daily bookkeeping, because it's just what we do. And we're going to talk about some of the ways that Dext help manage that, because for us, everybody kind of has their starred clients, so when they log into Dext, they only see the 20 clients that they're looking after, so it makes it really focused in terms of what they've got to do. But from your experiences both in practice and working with firms, how do people go about moving from monthly, quarterly to weekly or even daily?
Yeah, I mean, it doesn't happen overnight. That's the sort of thing to make absolutely.
I ever not.
Sounds nice and easy. Unfortunately, it requires quite a lot of planning initially, and structure, and deciding how best to approach it. And we actually had, my old firm, we were about 110 employees, something like that, or team members, 110, and we did have a dedicated sort of number of individuals who were involved in the bookkeeping side of things. But they're training. They also want to get involved in other areas as well, so they get the whole round of experience. And what we used to have, we actually called it messy teams. And a messy team effectively meant that somebody could be dedicated, their core role was in bookkeeping, but they also were involved in other areas as well. So we had our accounts team, our tax team, our bookkeeping team. So the messy teams bit was people did overlap into other teams. Now, these trainees then start doing more and more and more. They get more experience. What generally happens is they move from the core bookkeeping is their role to maybe more sort of accounts and tax, and they start doing less bookkeeping because we've got new graduates, new trainees coming through. So we had a very sort of flexible, fluid model, whereby also it meant that, yes, they were dedicated to particular or allocated to particular clients, but you could also look at it as like a bit of a factory approach, in that, or McDonald's, I always refer to McDonald's, that people move around in McDonald's. My son works at McDonald's at the moment, and one week he may be at the front of the sort of stand. The following week he may be making the burgers. The week after that he may be doing something else. It was the same sort of principle that we applied with our bookkeeping, that you aren't just dedicated to this client. If something else came in, you could easily pick it up, because you've got the foundations, you've got the knowledge, you've got the experience and the core sort of bookkeeping understanding to be flexible. And, you know, every time we brought in new graduates, they always went into bookkeeping at the start, usually for a good 6 months, to get that foundational knowledge. But then we would try and expose them to other areas. And where we were moving to, or where I was looking to move us to prior to me leaving, was actually, could we get to the point of documents just come in, you put them in a tray, and people just goes, right, there you go, start processing that one, start processing that one. The challenge we had when we started thinking about it, you have to have some core knowledge about the client. So then we started creating, call it like a permanent file for bookkeeping, which had sort of headline things going, this client's VAT registered, watch out for directors' transactions, note by they've got a partial exemption issue. So it was just like a memo that anyone who picked it up got a good overview there and then, to then just make a start on the processing.
I love that idea, like a one-pager for a client.
Yes. Yeah, exactly.
Yeah, I mean, for me, I've talked about pod structures fairly regularly, and for me that was the bit that unlocked it for us. And we've tried lots of different structures, but pod structures was the one that worked. And we operate in a pod of generally 4 people. There's a client manager, a senior, and 2 trainees. The pod can deliver X amount of revenue. They do everything for the client with the exception of payroll. So they're doing bookkeeping, management accounts, VAT returns, annual accounts, personal tax, corporation tax, and so on. And what that means is everybody gets an allocation of clients. So our trainees are doing a lot of the bookkeeping. But the pod structures, certainly when you have a firm that's organically growing, means that we're also creating those career progression opportunities, because somebody does a year as a trainee, then they become a kind of the next level up, and then they become a senior, then they become a manager. But we can move them between pods as well. So we've got that continuity, but what it means is everybody's dealing with the same clients. They get to know the clients, and again, coming back to how we fit that with the way that we use Dext is we're using advanced, and therefore we've got the ability to kind of flag clients to individuals. So when they log in, they see their 20 clients. And from a daily bookkeeping point of view, that visibility is there. On that list, they can see who's got stuff in the inbox. We can also see who's got transactions in zero waiting to be reconciled. So this is where we start to get into the process and the workflow, and having the structure that fits around it to enable us to do daily bookkeeping really effectively. Because everybody's diving in, they're doing the same clients. So it's almost like they're sitting in that business for 10 minutes every day, or whatever it might be. We position our bookkeeping as a weekly service to clients, because what we're not doing is going to the client saying, hey, we're this receipt missing for this bank line item today. We're doing that on a weekly basis, but we're processing the transactions on a daily basis from Dext, and we're reconciling the bank on a daily basis. But it's that structure that for us kind of just made it work, and it's one of the things that I talk about that has probably been one of the biggest contributors to our ability to scale, in that we spent a lot of time getting structure right to enable us to do this stuff on a daily basis, and do it effectively and efficiently on a daily basis.
Yeah, we did it slightly differently. We had a small business unit. So any work that needed processing regularly, any kind of bookkeeping work would be done by the small business unit, and it was still like a diversification of directors who had within their portfolio, they'd have probably everyone would have a chunk of what we would describe as small business clients. It wasn't actually necessarily that they were small, it's just that they needed more regular input, probably, as you say, like weekly bookkeeping or something like that, and more regular meetings around business advisory and management accounts. So it just shows that it kind of works differently for everyone, I think, based on their client split of portfolio and things, because we had a lot of kind of larger jobs which never would have needed touching by the small business unit. But what I think it really does, like the cloud technology does allow, is a real diversification in the types of people that you're hiring into firms now. And I do try to encourage people to keep an open mind in what they're looking for. Like, we don't have to all now follow the same path in this is almost your personality profile, and we put you through AAT, and then we put you through ACCA or whatever it is, or ACA, and then we put you onto audits, and this is like your direction of travel within a firm, and that's the only way it works. I think what this allows is a real diversification in what you're looking for, because the receptionist can do the scanning, like you were saying, Paul. There might be an inbox, and as documents come in, receptionist scans them, gives them back to the client whilst the client's having a cup of coffee. That information that then doesn't get stored in the storeroom, but also you've not got people like trained accountants scanning information in, so you can really diversify the roles of what people are taking within that kind of daily bookkeeping. So when you're talking about how do we start, because I think that's one of the biggest challenges, is actually we've got an end point, we know where we want to get to, but how do we even start on the road to getting there? It's maybe looking at the people you've got within the firm, but keeping an open mind about who you're looking for as well.
Yeah, and I think what we're talking about here in terms of this idea of moving to kind of as close to real time as we can is the big step from what we talked about in part one to what we're talking about here in part two. Part one was, look, why should you be doing this? Why should you be using technology? Now we're saying, right, okay, well, when you're using technology, how do you really refine what you're doing to deliver the best experiences for clients, giving you a competitive advantage over and above anybody else? And we said, and everybody nodded, so less than 5% of accounting firms are doing this. So it is a very unique proposition, but one that clients should look at and say, well, that makes perfect sense. And the one thing we haven't talked about is the big reason for me for doing a lot of this was about client touch points. So if we are delivering this as a weekly service to clients, albeit we're processing daily, that means that once a week we're going out to our clients and we're having a conversation to some degree with 60% of our client base. 60% of our client base we're doing bookkeeping for, we're having a conversation with them once a week. So that creates sticky relationships, that builds good relationships, and all of the talk of advisory is really just a case of have great relationships with your clients so they ask you for help. This is the way that we create really good, strong relationships with clients, by doing this stuff on a regular basis and talking to them on a regular basis. So a whole bunch of why. We've touched a little bit on kind of how, Paul, you gave a bit there. We talked about structure a little bit there in terms of how it happens. In terms of how, start with clients that you're doing in-house bookkeeping for and just start doing it more regularly. Yes, there's client education. You've got to educate clients in terms of why they need to be doing this. The fact that we go out to clients weekly, if we're chasing the same client for the same stuff every week, at some point they're going to get bored of talking to us about it, and they're going to take action, and they're going to fix the problem, and they're going to start sending us the stuff so we don't have to hassle them. So we've got to be prepared to invest some time into educating our clients. But that leads us into the tech is going to help us do that, isn't it? In terms of particularly our experiences with Dext and Receipt Bank before it. The platform kind of helps us measure how we're doing, how clients are doing. It helps us validate the quality of the data that we're getting, and provides us points at which we can say, well, actually, if we improve this by this amount of percentage, it's going to have this impact on the business. So Paul, I mean, I know this is very much your area as product. What has Dext got that many people don't know about? I mean, I include us in that as well. We had a conversation recently that we've been using Dext for 11 years. And we're probably still using it largely like we did in 2012, but it's moved on. So what might people not know about?
Yeah, I mean, within Dext now, we provide a lot more insights in terms of the overall efficiency, the flow of information coming in from clients, the health of the data as well. And the big thing for me when we were building this, probably 18 months or so ago, was every firm generally has a practice management system, and every firm will look at their KPIs from the practice management system. They'll look at their recoverability, they'll look at their write-offs, time charged, all of those KPIs that you get. Well, the equivalent KPIs that we have in Dext are equally as valuable, but they're very, very powerful when you start combining these things. So we can look at and tell you what's the delay in terms of the documentation coming in from your clients. So one of my favorite insights is, as you know, I talk about it a lot, is the delay day index. The delay day index looks at the date on a document compared to the date the document was actually uploaded. And the bigger the date difference, the more likely it is, well, the more certainty is you haven't got completeness of records. And one of the examples I always give is if you have a delay day index of, let's say, 40 days, that means on average it's taking 40 days from the date a transaction has occurred to the date the document has been uploaded for extraction and then subsequent publishing through to your general ledger. Why is that important? Well, if you think about a VAT return and you've got effectively 37 days, what it basically means is there's a good chance when you're completing that quarterly VAT return or the monthly VAT return, there's a good chance there'll be documents that you haven't yet received, in which case that could potentially have a cash flow impact for your client, because there's a good chance it will be on your input tax rather than your output tax. There's also then a knock-on effect as well in terms of your purchase ledger, your sales ledger. Are the numbers up to date? Are you comfortable that the insights that you're looking at are complete? And if they're not, that could have a knock-on impact in terms of whether you're looking, we're coming up to the end of a tax year and everyone's going to be looking at remuneration planning. Should we be making a pension contribution from the company? At the moment, the accounts are showing a profit of 60,000. Well, let's make a company pension contribution of 10,000 and get out a marginal rate. Now, the risk is if you've got this delay day index of a high number, there's numbers aren't in, the numbers you're looking at, good chance you're going to make a decision that isn't wrong, but may not be as accurate as it could be. And then we've got other insights that then really drive the efficiency and making sure that you are getting the maximum value as possible you can from Dext. So we look at some of our supplier rules, auto publish, auto categorization. How many transactions have you actually got as auto publish? And these are transactions where the nature of the transaction wouldn't change. So a utility bill, are you using auto publish on some of these invoices and cutting out the time being spent in terms of processing it? It may seem a small amount. You may think, oh, it's only a couple of seconds. Think across your client base. Think how many utility bills may be coming in every month. Think how many sort of phone bills and things like that. And then start to look at that and think, actually, this could be a couple of hours. This could be a few hours every month or every week that's being saved. Yeah. And when you start, tracking the use of automation tools within Dext against recoverability over a period of time, you will see an improvement in recoverability as you start to increase the advanced automating features within Dext itself. But it's the insights that can really make a difference and help drive decision making as well.
just an example. I've just had a look at our stats and for kind of sense check here. We processed 18,500 items in the last 30 days. So that's the extent of the data that we've got coming through Dext. So 18,500 items over the last 30 days. Supplier rules are about 54% on that. So over half of the transactions that we process had supplier rules set. And Paul, we've talked about delayed day index. I love delayed day index as well. Ours is 5. So on average, it takes us 5 days to get the receipts, and that's because 18,000 items that we've processed in the last 30 days. On average, we're getting that within 5 days of the client getting the receipt or spending the money. So I mean, just in terms of the way that we can use this data to drive what we do, and don't get me wrong, that 5 days has come out of many years of educating clients, them being educated on the process that we want them to follow, because one of the things I say regularly is that you can't control the profitability of what you do if you don't control the process. So you've got to take ownership of this bookkeeping process for your clients and help them understand why they need to do the things that you're asking them to do. But so often we hear firms say, "Oh, getting records for my clients for a nightmare." We get them in 5 days. So it's not a case of 4 months after year end. It's like we are getting transactions from clients within 5 days of them spending the money. That's what's possible. And when you can track it and you get the data to say this is where you're at, and obviously you can drill down on individual clients there and look at what the delay day is for clients, so you can see who the guilty parties are as well, of course, can't we? And say, clearly, we need to charge you more because we're chasing you consistently for missing information. And there's a couple of people on the call that I've had this conversation with, looking at the attendees. It's this challenge that, or the opportunity that for me, Dext is much more than just a data extraction tool. So when I talk to firms, I say, look, you've got to be using the full capability. You've got to be using what's now advanced, used to be kind of optimized, because otherwise you are just using a data extraction tool, and you're missing the point, and you're missing the opportunity to use it as a system that's going to drive your bookkeeping processes and workflows. And it's the insight that we're talking about here that helps us work out what works and what doesn't in terms of what we're doing. So in terms of data validation, improvements and things, Paul, Katie, what else should people be looking to get from Dext to kind of hit some of these metrics that we're talking about here?
I think another good one on practice insights that I always call out is the ability to be able to see the way that the information is getting in the system, so the method in which it's being uploaded. And the reason that I always call that one out is because I think you can really use it to drive the right behaviours, not only with your clients but with your team as well. And I'm a trainer at heart, so it really helps you spot training opportunities both internally and externally as well. So just as an example, I guess, that those the 5 day delay day index that you've got on your receipts, I imagine probably quite a large amount of them, the method will be our mobile app, because it's just the easiest way for people to get information in regularly. Of course, people can sit down, log into the web browser, or forward PDFs in via email. But we know that kind of an SMB with a phone in their pocket, the easiest way is going to be to take photographs of receipts and invoices on the go. And that's how you really drive that, real time or live accounting information. And so it's very, very easy for you to spot, because you can use the filters and things as well. We've got a whole chunk of clients who there's a longer item delay on them, and everything's coming in by the website. So actually, do we need to have a bit of a seminar on the benefits of mobile apps? And that's not just Dext, but kind of whatever else you're putting in their pocket as well.
Yeah, we're about 45% email and about 35% mobile. on ours, with the rest being kind of direct upload. So yeah, reasonable mix there.
Yeah.
So in terms of thinking about kind of structure, I talked about pod structures, and both of you talked about some of the structures that are in place to enable this when you're working in practice. Thinking about workflows and structuring workflows, what best practice do you see with firms you're working with in terms of these workflows to both kind of improve efficiency, but ultimately what we're delivering for clients?
I mean, I think from my own experience, it's really important to have standardization and consistency in terms of work and the jobs that are being undertaken, because the second you don't have that, you end up with two scenarios. You either have some of the team who go overboard and check absolutely everything, and they're delighted when they found a 1p error somewhere, and then you've got the other range who are taking more of an audit approach and sort of sit back and have a little look. So having that standardization and consistency ensures that you don't under or over service, and you're meeting the requirements that you have decided as a firm is the best sort of steps that need to be taken. And that, starting point for me is often with those sort of core jobs, whether it be the VAT return. And, this is how, or this is best practice for completing a VAT return. And that may include in the final stages, your box 1 to box 6 ratio, your box 4 to 7, and then maybe just a bit of a cross check, and making sure that everyone does that. And this is where Dext Precision can really help in terms of creating flows, repeatable flows that can then be tracked. You can have a feel for how complete a flow is. And that can really help with people who are just starting, new team members, who just aren't sure where to start on some of these tasks, that they have something there that is visible, and it also helps their manager also understand where they are in the process as well.
Yeah, absolutely. And just to completely echo that, a lot of the customer success that we deliver for Precision, for those firms who are looking to use those workflows, which we're just about to rebrand, by the way. So it's currently called the focus area, but it's going to be called workflow. So keep an eye out for that, and a few other bits changes. But the people, when they begin to use those workflows and they want to get them set up, we sometimes deliver a customer success session, which is sitting in the room with the team and mapping those workflows out first of all, and deciding as a group for everyone involved in delivering on a VAT return or on a bookkeeping job, etc. What does it look like for our firm to do this? And we even sat with I remember sitting on a session with Paul's old firm a couple of years ago where we mapped this out, and it's amazing how quickly the processes change from one person to another if you don't have it documented and processed really clearly within something like Precision, which is obviously task management, so literally step-by-step guide. Because you have people come in from other firms and they've had a previous way of doing it and they don't see a reason for change, or you have a trainee in who doesn't know exactly what the process is, and depending on who tells them what it is, changes their approach to a job, then probably across multiple jobs as well. So absolutely the consistency, making sure that everyone's on the same page. But those workflow sessions are always really fascinating, because you sit in the room and you don't listen to people argue, but you listen to people debate about what is and isn't important in a particular process. We always had a bit of a debate about whether you put the hard copy bank statement in the working papers file. If you've ticked to say I've agreed it, do I still need to put it in? You know what I mean? It's going to change and that's going to change in every section of the file as well. So it's always a really interesting session, and that consistency and standardization. There's just no two ways about it. It's absolutely crucial.
And it's really important to do it and get the team bought in and involved, because if they don't agree with the sort of process that you've mapped out, what they will do is take a different path. They will always try and find just to avoid it or not do it in a certain way. And it's good to get the team at all levels. Don't just get the managers in a room or some of the more senior people. Get the juniors in there as well, and understand what works best for them. And eventually you'll get to a mapped out flow that actually works for everyone.
Yeah, perfect. Conscious of time, what's next? Process automation. Where is the tech going? I mean, you've got the inside track, because you're probably looking very closely at this stuff and where the opportunities are, around bookkeeping process improvement. What can we expect in the next, I don't know, 12 months to 3 years, Paul?
Well, I mean, there's a lot of noise around the AI, generative AI, predictive analytics. I think that is really going to start to move forward significantly next year and beyond. At the moment, there is a lot of talk around generative AI, and everyone plays around with typing stuff in and seeing what it can do. I'm still struggling to see some really good use cases of it at the moment, where it works at a level that you've got comfort. I also know there's obviously privacy issues as well, but ultimately, even with all of this generative AI, you still need accountability. You still need somebody to make sure that what is being churned out is correct. But I do think, particularly with generative AI, I've played around with it. It's great if you want to write an appeal letter to HMRC, or you just want to pull together some sort of material that you can then tailor as well after. But it's very powerful. That predictive analytics, we're seeing a lot on predictive analytics. A lot of the sort of accounting softwares at the moment, a lot of the other apps out there, there's a definite focus on more accurate cash flow forecasting, but also predicting where something should be posted. Now, I think what we'll end up having with AI is actually reading descriptions on invoices, identifying whether something's capital or revenue, and actually getting more advanced in that area. I think RPA, robotic processing automation, I speak to a number of firms who are using that, whether that be on payroll, whether it be on a bank reconciliation, or whether it be on personal tax, where you have the same task being performed all of the time that can be fully automated. And then if I was to roll forward 3 to 5 years, I think blockchain and the impact that's going to have on audits will be huge. But there's a lot for consideration around that. The accounting bodies need to get their heads together on the impact of blockchain in terms of a statutory audit. So it's not going to slow down. It's just going to accelerate. And, our chief technology and product officer, Stephen, is all over this and exploring the opportunities it will create, and how we can really bring in more automation and efficiency into the whole of the Dext sort of suite.
Perfect. Katie, anything to add on that? Or has Paul done the job nicely?
No, I mean, nothing extra, except to say that we should just be very excited, I think, and we don't need to be too nervous. Obviously, cautious, yes, of course, cautious, but I think it's easy to be a little bit nervous when it feels almost like knowledge that is almost unsurmountable, isn't it? Like, that, will we ever really get our heads around it or understand how it's working? Probably not. But I think it does pose a huge opportunity for us if it's used in the right way. And so not to try to avoid it, and not to be silly, like Paul mentioned, around security, GDPR, putting kind of sensitive information into it. But do, download it, do explore it, do kind of as and when we release iterations, we're asking for beta testers all the time. I think if we've not talked about anything over the last 2 sessions, it's not too late for early adoption, and early adopters really do get the apple, or whatever you want to say.
Yeah, absolutely. I mean, we made that point, I hope, quite clearly in part 1, that adoption levels are still incredibly low. So astonishingly, kind of 15 years after we started our journey on this at Farnell Clark, anybody doing this now is still an early adopter in my book. And the early adopters are the ones that maximize the opportunity. So don't for a second think you're behind the curve. The opportunity is still huge, because many firms are still resisting doing the really basic stuff here. So point well made there, Katie. Just as we kind of come to the end of the hour, just a few takeaways for you here that I hope we've kind of covered off during the course of the session. So this idea of real-time or live data, for me, it's the key to unlocking real value-add services and competitive advantage. So it's the opportunity for you to be doing something that the vast majority of your competition locally or even nationally are not doing. So grab it with both hands and utilize that opportunity, because it's the right thing to do for your clients as well. Think about how you structure your team, processes and workflows for maximum efficiency. So if you decide that you want to be doing this on a daily or weekly basis, from the monthly or quarterly you're doing at the moment, think about how it all comes together. So making sure you've got the right people doing the right bit of the process at the right time. Think about the way your teams are structured to support that, and we've talked a bit about processes and workflows, and naturally use the right bits of the technology as well, and let the technology do the heavy lifting for you. That's the point here. The technology's been designed to take away the stuff that can be automated, to free you up to do the stuff that really adds value. And to wrap it off, Dext have created a digital transformation survey with lots of recommendations, insights to help you on this this transformation journey, whatever stage you're at. So by all means, use the code here. We will be circulating the recording of today's session, so you'll obviously have access to this, and we'll put a link in the email that we send to you to help you do that. If nobody has any questions, there's nothing in the Q&A box at the moment. I'll come to Paul and Katie for kind of a closing comment, whether it's something we've talked about, whether it's the opportunity, whether it's what people should be doing next. Paul, come to you first. Any closing thoughts?
I would just say, we're all used to tracking KPIs from the practice management system. Pick one of the KPIs relating to bookkeeping or processing and start to track that and set targets to try and improve it. So it could just be, how many clients have you got direct bank feeds in place for? And start tracking that and try and move the dial, and then link that back to the time being spent on those clients as well during the course over a sort of a 12-month period, 6-month period, because it will start to give you confidence, it will start to build the trust, and it will start to demonstrate why you're on this journey.
Yeah. And Katie?
I would just say, irrelevant of kind of where your year end is as a practice, I think we all feel slightly reflective around this time of the year, and we want to set ourselves new goals and achievements for the year coming. We've certainly been doing a lot of that in Dext and in my team as well. And I'd just encourage everyone to do that within their practices, and as Paul mentioned, across all of the different team levels as well. Bring juniors, bring managers, bring partners in around the goals and objectives as a firm, and what people want to achieve within their own kind of development over the next year, as well as the service that they're providing to clients as well, because it's going to be different levels for different people. But actually, I think it's, I'm not really saying anything new here, but do encourage people to take the reflection, set the goals for next year, and as then Paul mentioned, track the KPIs, check the activity. It's something as a SaaS company that we're really hot on and that we're pressured on a lot, is making sure that when we make plans and we deliver a training session, for example, is that we're measuring the impact afterwards. So take some reflections, do some planning, but then make sure that you're kind of measuring them in a really clear way, so that you can track your progress next year, check back in around the same time, and really see the movement and the progression that you've made as a business.
Perfect. Thank you, Katie. And for me, it's rethink the way you think about bookkeeping. See it as a really valuable service line for your clients and for your firm. It really is the key to unlocking the opportunities, both competitively, but also for the real value that you want to be delivering to your clients. So that's mine. Thank you for taking the time to join us. Paul, Katie, thank you for joining for the last 2 sessions. Hope everybody's found it useful. We're kind of almost at Christmas, so we can probably wish everybody a Merry Christmas now, can't we? And prosperous 2024 and all of that kind of stuff. So do enjoy it. Thank you for taking the time for joining this session and the one last week, if you were there for that as well. Hope it's been useful. Recording's on its way to you. Thank you all very much, and enjoy the rest of your week. And thank you, Paul and Katie. We'll see you all soon.
Thank you.
Take care, everybody.
Bye.